All right, you guys, this is Uncle P, and we got a lot of news to cover this week. I call this Hell Week because it really is going to be hell on wheels for those who are trading in the market. So let's not wait. Let's get right into the video right now. I'm going to do a separate video on this, but I just want to give you guys a heads up because I know a lot of people are trying to do prop firm challenges and stuff like that. And I told you guys that just outsource the work to us. We'll help you with that. But as you can see, last week we had 10 wins, only one loss, one break even, and we're still holding this particular trade right here. So if you do need help with this, trying to pass the prop firm challenges, you don't have time to trade, so forth and so forth, just go to our website. superezforex.com, sign up, and it's real free. And you do have live classes that you can attend and trade live with Miss Jenny as well. That's also included with the service in addition to the signals. Okay, so let's get into the news. All right, so for a lot of people, they don't know. Oh, I forgot to put this correctly. I put this backwards. This should be over here. So let me cut that and put you here. And I'm going to go over what these actually stand for, because one of these that is up here, let me copy, and put you here. All right, so there we go. That it looks a lot better. So for a lot of you guys, you don't know what CPI is and why sometimes when the news come out on it, it actually starts fireworks in trades that you're in. The word or the initial CPI stands for Consumer Price Index. What Consumer Price Index is, it's basically measuring the changes in prices that you and I are paying for our goods and services throughout what they call a basket of typical services, such as your food, groceries, toilet paper, stuff like that, their basic needs. And it's measuring how high or low, whether the prices get higher or lower. The biggest thing that I have been saying for the longest, for the absolute longest, the problem with inflation and all this, oh, we're fighting inflation kind of stuff. What happens is when the prices go up, they don't come back down. Do you get what I'm saying? Very few items that ever went up will go back down in value, such as your rent. Once your landlord raises your rent, and I used to own a lot of properties, and I used to be a landlord and own many, many properties, so I know what I'm saying. Once we raise your rents up, we're not trying to go back down. It's the new normal. Okay, same thing with bread, with hamburger meat, all these different things. Gas prices may fluctuate up and down depending on the oil and who's manipulating it and this and that. For an example, if the U.S. ever decides to go back and drill oil from our own land versus buying it from other people, you'll see the gas prices drop it probably in half. Why? Because that's supply and demand that we can control, and so it fluctuates up and down. But as far as the normal things for transporting your groceries, which the cost went up on that, so therefore they're going to pass the cost on the use of the breads, the rents, clothing, everything that Similac, milk, all those different things that you typically get are what they're measuring. And that is another form, in my opinion, of them measuring inflation numbers. Okay, so that's the reason why you will see that jump. So that's what CPI stands for. So let's go through the news, and you'll typically see, as I mentioned to you guys before, out of the pairs that I like to trade, my least favorite ones to trade is always going to be the Euro and the USD. And the reason why is because those are the two pairs that are subject to the most news every single week. Okay, if you ever go through the news week or come tune into my channel where I'm doing news events every week on Sundays, giving you a heads up before the market open on what to pay attention to for the week, you'll always notice that the ones that get the most impact is going to be the Euro and it's going to be the USD. Okay, now, if you like them, the best way to trade these, and this is just a little trading tip, one of the best ways that I like to trade them is if you're trading the Euro, you might want to wait several hours after the Euro market has opened or the London market has opened. Wait a couple hours. And my students, you know this, I've been teaching this for the longest. Wait a couple of hours if there's going to be a news event or something that you're not sure. Wait a couple of hours after the market opens so that whatever news have come out, it has a chance to react to it. The market settle down. And then if you still see a legitimate setup, so be it. The problem is that during the Asian session, they do this quite often where they will set up the market, give you some good setup looks. And then when London comes out, they use news events to spark the market and just take out stops. What was so cool last week live in class, if you're not in my live class, sign up for the Simplicity service. You'll get a trading system, but the classes are free. Okay, forever. Never charge for the classes. And it was so cool because a news event came out on CAD. Okay, on CAD. And what was nice is because I sent a message throughout my entire groups, all the groups we have. I sent a message out warning everybody to be very, very careful on trading the CAD. Okay, so live in class when the news came out on CAD, it was just wonderful. The market shot up like crazy, inducing the buyers. Like 2 minutes before, I think it was 2 minutes before, you started seeing it go up, 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 up. And then we watched it live in class. We was all watching. I said, watch this, y'all. We was live in class. Within seconds before the news event, it shot up huge. And many of you who's watching this video probably lost money because you're trying to trade news events and you're not familiar with how they do it. They shot out a huge bull candle. It had to be at least 30, 40 pip candle that shot up. And the moment the news event came out on CAD, the market shot all the way down and just took every dime anybody had who didn't close it out smartly. And I'd laugh. We had a great laughing time about it because they say, oh my God, Uncle P, you always telling us about it, but we've seen it with our own eyes. And so this is the whole point. The market gets manipulated prior to a news event. They took that candle way up and then dropped it real hard the moment the news event came out. Why? Because they were faking people out to get you to bring your money to the table. And then, boom, they suckered everybody and it just dropped like a rock. And it went right through support and resistance levels, supply and demand zones, whatever strategy you were trying to use. Again, this is why I'm advising people before news events, do not consider your strategy effective. Because the markets don't respect a strategy. Majority of the time, they're going to blow past that and use it as a method to take out stops. Okay? Because they know what your strategy is. So don't be in a hurry to trade news events if you're not experienced in it. There are some people who know news events like the back of their hand. They do they'll call fundamental traders. So they trade fundamentals. They look at the news and that's how they trade. They trade based off of news events because they do a whole lot of research on it so they know where it's going to go. So once they spike the market up, those people jumped in heavy with their sales because they knew where it was going to go and they were right. Okay, but if you're not familiar with that, just stay away from the markets. Here's what I would advise, okay? Oftentimes, what we try to do as traders, and I'm going to go back to the news, but let me just really help you, okay? Just sharing my mistakes. Oftentimes, when the market spikes up really high, what we try to do, I know this thing going to come down, okay? And you will be right. You will be right. The safest way to do it, if you're not experienced, okay, is don't try to call the tops if you're not experienced, okay? Because you may think it's going to stop here, and then how many times have it gone past there and you blew your account trying to do that? I would strongly suggest wait at least an hour after the news event. Let the market settle, 30 minutes to an hour. Just let the market settle. And then after a while, it loses its energy. And if you then see a setup where it's stopping at its resistance level or support level, after about 30 minutes to an hour, then possibly I say you can go ahead and do your thing. But don't try to jump in the moment it hits. It shoots up real high and then you say, okay, this should be it. And then it shoots up higher and takes you out. Okay, that's happened to me many times. Okay, all right, that's enough tips. Let's get to the news again. Here's why this week is going to be so freaking dangerous. Look at this. So on Tuesday, you got the core CPI numbers, which is what I told you, another inflation report. Man, look at this. Now, this is going to be a huge one. Anytime, I'm telling you, anytime inflation numbers come out for the U.S., you really want to pay attention to it. As I taught you guys many times before, when the U.S. sneezes, the other parts of the world catches a cold. I guarantee this is going to be something big right here. But what's crazy is because, and let's keep going, you got the USD coming out with who? core inflate. This is another form of inflation. Okay. Then the euro comes right back with their what? Inflation numbers, just like the US did. Then here's the big kahuna. The Feds are going to come out with interest rates. This is going to be mega big. And let me tell you why. There's one side of the fence that says, well, the Feds have already raised their interest rates enough and they should take a break for a moment before continuing to raise interest rates. There's very little doubt that they're going to continue to raise interest rates, but they think they're going to pause for a moment to do so. That's one side of the fence. The other side of the fence is saying that inflation has not come down, so they probably will continue to do so. One fence is saying, well, they should stop it for a moment to give the banks a break so that they don't all collapse overnight. The other side says keep it going because guess what? They're trying to get rid of all the smaller banks anyway, corral everybody into the few remaining big banks that they have, and then go ahead and push for the digital currency because you don't have any other choices. Same thing that you're starting to see in the crypto market. If they can't stop the crypto markets, then let's attack the crypto brokers so that people can't even trade and buy other cryptos on these other platforms such as Binance and I forgot what the other one was that's now in the news, and they're just starting to attack those. So that's the other side of those are the two sides of the fence. Whichever side you find yourself on, that's your personal business. The problem is that regardless of who's right or who's wrong, this is going to be shaking these markets like crazy. So now you get hit with the inflation and you get the interest rate in the same week. Now here's the blessing though. There is a blessing. Here's the bright side. There was one more news announcement I wish they would have put in this week, and that would have been NFP. And the reason why I say that would have been a blessing, because this is a blessing. Next week, you're probably going to have a pretty mild week of news. But here's why this week is going to be a terrible mess and a blessing. Because at least they're cramming everything into 1 week at the same time so we can just get it over with versus stretching it out here or there. I wish they'll continue to do this instead of 1 week they're bringing out inflation numbers and then the next week you get hit again with the Fed interest rate. So I wish they would cram it all in 1 week, NFP, Fed interest rates, and inflation in 1 week. And guess what? Here's why I would suggest some new traders. If you're not working with professional traders, such as like our Signal service or, something, or me and my Simplicity group, if you're not willing to do that, then take a break this week and just watch and learn the market. Okay. Watch how it moves. And you'll learn more by just sitting back and taking a break versus forging ahead, especially if you're trying to do prop firm challenges using prop firm accounts, blowing the heck off the tops of them, trying to trade these hectic weeks, and you didn't even know what was going on. Okay, so if that's you and you don't want to invest into education through Simplicity or working with Miss Jenny or through our Signal service, then please just take a freaking break and just watch how this week plays out. But there's more. Here we go. Next, after the U.S. hits you with their inflation numbers and this and that, you have Euro coming back with inflation rates. Now, why is it that the Euro is hitting you with so many echoing or repeated news events? Well, because it's called the Eurozone. It's kind of like the United States of America. So you have 50 or 51 states that make up the United States of America. Well, and over there, they have different parts of different countries like Ireland and this and that. Because I have a friend in Ireland who I talk to every week. He's up in Ireland, but that's part of that zone. And then you have the London, and then you have this, and then you have that, and all these different zones add up to equal to the Eurozone. So when you have announcements come out, such as CPI or inflation numbers, you may see it multiple times because it's representing multiple countries that comes up that gathers to create the Eurozone. Do you get what I'm saying? So it's multiple different zones that add up to the Eurozone. So each one has to make their individual announcement. That's again why a lot of times when you're losing trades, a lot of them are going to be on the Euro because the Euro is getting hit so often with repeated news events because of where it's located. All these different zones reporting the same thing. So you're getting hit back to back to back with the same news over and over and over again. So it makes it kind of uncomfortable to trade the Euro if you're not experienced. Does that make sense? Okay, so here's an example. So we already had the CPI numbers. Then we come back with the Euro on Wednesday coming out with their inflation numbers. Then you come back on Thursday, they're hitting you again with inflation numbers. Guess what? On Friday, they're hitting you again with the same thing, the CPI numbers. Consumer Price Index, okay? Then on Thursday, you have the JPY. Now, JPY, I actually like this pair. There's hardly ever a lot of news coming out on the JPY, which is why when you go to charts, and just let me teach for a moment. When you go to charts, some of you guys like that fast-paced pairs. Give it, okay, and that's fine. That's fine if that's your trading style. No problem at all. But what makes them speed up a bit is because they're jumpy. Okay, they don't know what to expect, and they can't get hit with news, so they move fast. You know, you got to be on your toes with them. You're right. But the slower pairs, like the AUD, NZD, which moves very, very trendy, but very, very slow. The reason why is because the AUD doesn't get a lot of news, and the NZD does not get a lot of news. So you'll find that those typically will have a much smoother trend. The trend is really your friend on some of those pairs, right? The JPY is one of those that doesn't get hit with a lot of news. So therefore, you can trade pairs that also do not get a lot of news on them. And you might find that the trend on those pairs are going to be much more smoother than if you're trying to trade a hectic with a smooth. Okay. Now, I will say when you pair up a hectic with a smooth, it will still kind of balance it out. Meaning like the Euro, EJ, I call it EJ, Euro, which gets a lot of news, paired with the JPY, which don't get a lot of news. So it kind of tempers the motion of the ocean on the Euro because you have another smooth pair tied with it. Does that make sense? So I'm just helping for some of you guys who's new to trading, don't understand how it's moving. Why are some pairs jumpy and shooting bottle rockets all the time? And then you have others that are slow. Now, here's the problem. If you're a person who says, yeah, but I like that fast movement. Okay, then you're subject to whatever happens with news events and stuff that spikes and hits you and you getting slapped around. But if that's what you like because you're an adventurous person, do your thing. There's nothing wrong with that. It's your account. But if you're a person who says, I need to take trades, I work a full-time job, or we got contacted by a person who drives trucks, and he said, I can't be on the charts all the time. What's the best time frame and this and that? I'm telling you, my favorite time frame is the 4 hour, but the daily works as well. But again, if you like the weekly or the monthly, do your thing. It's up to you. Okay. But I would also look at the pairs you're trading and try to match up the ones where even during Hell Week, see, this is considered Hell Week for me. Okay. Because the major currency pairs are the ones that's getting hit with the most news, right? Which ones do you not see on this list? You see what I'm saying? And this one comes out once a month with this. So realistically, it's not that big of a deal. So typically, if it wasn't for its once a month report of interest rates, most of the time you don't get any news on the JPY. So what pairs do you not see on Hell Week list? Those are the ones you might want to start focusing on if you're a person who doesn't have time to dedicate to the charts, or like I said, why don't you just offset it to us? Look, last week we had 10 wins and only 1 loss. We can help you with that, and we'll just send you signals, okay? All right. Now, what's so funny, they do all of this during what week? Father's Day. Oh, well, thank you guys. So you beat everybody up, get everybody broken, then, oh, it's Father's Day on Sunday. Don't nobody got no money to celebrate no father now. Y'all took all the money. Y'all didn't do this during Mother's Day, but you set it up on Father's Day week. Well, thank you so much for your services. All right, you guys. I'll see you in the next video. Talk to you later.